This content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. What's going on, everybody? How you doing? OccamsPhaser here. Currently June 4th, 2022. Current price of SPY $410.54. It is down negative 0.73% for the week. Down $3.01. Now, in this video, I'm going to go over some levels of support and resistance, a couple patterns, a wedge, a bearish cipher. We're going to talk about quantitative tightening and quantitative easing, looking at interest rates, comparing them historically back to the last time we had this transition of QE to QT. But you guys sit down, buckle up, and let's dive into it. So what we're going to take a look at is the SPY 1 day. We're just going to talk real quick about QT and interest rates. We're going to take note that in October 17, that's when your QT started taking effect. The assets being rolled off the balance sheet of the Fed. What happened? First reaction of the market was to make a new all-time high. Granted, it's already in an uptrend, but uptrend, accelerated uptrend, new all-time high, a little bit of a flash crash, 12%. This happens right here at the beginning of QT, which right now in June, that is what the Federal Reserve is about to start doing, is the non-repurchasing of the assets that are currently on the balance sheet. So first reaction of the market, just remember, is up. Big up move, and then volatility starts to kick in. So your QT brings in volatility. Although it was bullish momentum to start, the volatility kicks in, we come down, we almost test this 200 SMA, which is the red line here, not quite, 12% down. And then we rally back up. This is while rates are on the rise, okay? Rates are rising. We get this little peak, this retest, now this true test of the 200 SMA, and then it rallies back to another all-time high, okay? We reach this all-time high, we start to come down and crash again, 20%. Then the Fed, and this is, of course, during the acceleration period of the roll-off of this balance sheet. So they keep going, they keep going. This crash happens after a new all-time high set. The Fed at this point starts saying, hey, we're going to kind of cap these interest rates. So they start to plateau. The market starts to rally. We hit a new all-time high. And then we really crash 35%. So in here, you really got your setup, and then you've got your big move that really disrupted markets. Granted, this was induced by other catalysts like COVID, but the makings were there for it to happen. Coming out of your QT, interest rates that are perhaps a little too high, a Fed that is not pumping enough money into the market, they decide to let this rate hike peak and come down. Now, this was a quick deceleration, of course, because of this crash, 35%. You know, they probably had some kind of slower plan, but nonetheless, this happened, planned or otherwise. It did, and our interest rates again plateaued, but this time on the bottom. And now we are seeing them start to rise here. But I guess the important thing to note off of this is that the first reaction of the market was to rally up to a new all-time high. Now, of course, this chart looks a little bit different, and we're going to go to current day now. And we're actually going to switch over to a 4-hour chart so we can start to look at some patterns. We are going to get rid of interest rates, and we're going to change this to regular. Okay. So now, current day. We are in June 1st. This is now, again, a transition of QE to QT. So too much assets on the balance sheet of the Fed. They're getting rid of them. And the market now has a decision on what it wants to do. So let's talk about what it has done and scenarios of what we might think it could possibly do. So this is something, the first pattern that we're going to go over is actually not one that I originally had thought of. It's not something I look at too often. It would be a cipher pattern, in this case a bearish cipher. This was pointed out by Verde on the Discord. I believe he got it from someone on Twitter, but nonetheless not taking credit for originally finding this with my brain and my eyes. So, you know, the white lines on here are going to be my original trend lines, which fit right into this bearish cipher. They pretty much paint the same story, but nonetheless, something that we probably want to go ahead and look at is this cipher. And I'm actually going to take this Fibonacci off and clean this chart up slightly. And we're going to actually, I'm going to go out just so you have context for this upper white line. There is some nice contact points making this a descending level of resistance coming down here off the bottom, off of this first, what would you call this? This look back counter rally here at the bottom before we actually made this more true bottom. Although, as we start to talk, this might not be the true bottom yet. But we do have this ascending level of resistance, this descending level of resistance, and we can change these colors. Let's change this to red for resistance, red for resistance, green for support. Okay. And then as well, coming off of this bottom to pretty much current day, you have this level of rising or ascending support. Along this ascending support, there is what I see a Elliott wave, or at least an impulse, the start of an impulse wave, which in theory would come with its own corrective type of action. I can try this out. Without making measurements here, it would look somewhat similar to this. Now in my mind, this works off the Elliott wave. It works off this ascending wedge, and it is working off of this conglomerate of resistance, and the support right here has actually officially been broken by, let's see here, 1, 2, 3 candles. 3 candles have closed below this ascending support after the 5th leg of this impulse wave was completed. So we could be possibly on correction wave A, coming out of this ascending wedge, coming off of this overhead resistance. You know, you do have this lighter red line, which is your 200 SMA, never really truly got tested, but again, overhead resistance, it's just all mashing together perfectly right here on the 4-hour chart. So just a very curious cipher within. Of course, that cipher is always going to have this little wedge in it that you can draw out, but matching up with overhead resistance as well, and just kind of matching oddly right into the very start of your quantitative tightening, the roll off of the assets. So the question is, do we have a correction or do we continue our impulse up? Just as we did back here. We came at quantitative tightening and we made that all-time high before a drop in volatility, all-time high, drop in volatility, interest rates peak. Oops. All-time high, and then the big crash. So are we somewhere right here before an all-time high? Maybe we're a little bit further into it. Maybe we have priced in some of the QT already in anticipation. You know, perhaps we're somewhere down in this region, this second test. See this all-time high, this test of a low. We rallied up, we came back down. We're going to go back to the 4-hour Bearish Cypher, and we're going to take a look at if this were to break to the downside, as this pattern more often than not shows that it will. We would be using our Fibonacci to help us determine some levels. And I know earlier we kind of drew out ABC correction, but we didn't do it in scale. You know, this time we can actually maybe look at it more technically and look at the actual levels and the scale of that correction if it were to happen. So nothing moves in a straight line up and down, but we're going to drop this Fibonacci down here on our C to our D. Okay, this being our 100% retracement. And we're going to worry about our 382 and our 618 Fibonacci. And let's actually change this to green. And we'll choose another green. How about this one? Okay. So if we do get a break of this pattern to the downside, which it is showing signs that it is doing currently, we would be looking at the 382, which would be 404, as a first possible price target. I'm not saying use that as a price target. I'm just saying the rules in the Bearish Cypher. A lot of traders will probably agree that you're going to use the 382 Fibonacci retracement as a first level of profit taking, or at least a profit target off of its, if the D is correct and that is it's high and the pattern is correct and it is breaking, the 382 would work as a possible bounce. So you would want to start taking profits off the table if you got into a short position. In this case, the 618 being a second level, so 395. So if you're a little bit more aggressive, you can reach your hand down into the pot down to the 618 Fibonacci. Yeah, so we would look at that with perhaps a short position calculator and turn this magnet tool on, get up here, turn it off, and we're going to go ahead and set that first price target down here at the 382. Now, risk would be up to the individual, but you know, if you wanted to find at least a 2-to-1 ratio, you'd have to set your risk somewhere right around there. So a stop of, you know, $7 move to the upside of from entry, which would be about 1.69% move on the SPY, and you're looking at a 3.47% drop from entry. So you have a 2-to-1 ratio there. If you wanted a tighter stop and you really truly thought this pattern is going to break with no true look back that would break this overhead resistance as it would come up, you could perhaps set a 1%, which would bring you up to 3.5%, or I'm sorry, 3.5 to 1 risk reward ratio. if price moves down, you start to take profits off the table. You move to your next price target level. Of course, you would probably want to also manage risk because you're sitting on profits with what you have left on the table. And you just simply move that down. And, of course, we could tighten it up 1% on a trailing stop, looking for another 2% drop on top of that 3.5% that you've already seen. And that's typically how you're going to play the trend of that break of this bearish cipher, or any kind of wedge that's going to break to the downside, triangle, any pattern that is going to break to the downside or should break to the downside according to historical patterns. This is a method you can go through. In this case, we are using specific levels that are specific to this pattern, but this is a risk management tool that everybody should be at least taking a look at and considering. So risk management aside, come over here to our path tool. And generally speaking, maybe we come down, continue this trend to the 382, and we have a little bit of a look back resistance. We come and test this little bit of a low right here to find resistance. And, maybe we break down to the 618 and find support to come back up. Possible scenario. Another possible scenario is that it extends itself, but this time gets rejected by the 382, and we come down and set ourselves either a support off of 100% retracement, which is probably less than likely. If it starts to come down any further than the 618, more than likely you'll have a new low that is going to be set before you can come back up. So, that's probably your most bearish scenario I could think of. So just to kind of tie it back to what I was talking about earlier, maybe another A, B, C correction. Now, whether this ABC correction happens and sets itself a higher low or a lower low is yet to be seen. But this is a correction that could happen off this pattern. So moving on, we'll look overhead, and we're going to take this Fibonacci off. We're going to come back over here and bring up, let's see here, use trend lines. Okay, there we go. So we'll go back to our trend lines, and for now I'll take away this cipher. Okay, so again, you can see a little better. You do have that impulse wave, perhaps a correction wave coming out of these patterns. But to the upside. So we do have resistance, but we have a possible path. We do have an ascending level of support that could just be having a false breakdown. Could possibly, depending on conditions of market, it could rally. First level, big overhead level that you're going to need to take a look at. Of course, you have all-time highs. Let's get this out of the way. Oops, I'm sorry. I did not mean all-time highs there. Up here. I thought 462 looked a little funny. You do have this larger counter rally that set that swing high during this downtrend off of the all-time high. So two big key levels. Now this is a big ask to try to get up here. So bulls really not in control of anything until they decide that they can get and keep the market above 462. You have, look at this, a bit of a regression. So perhaps coming out of a larger channel, testing, coming off the bottom right now, of course, meeting that resistance as we've been talking about right there in the middle. But, you know, climbing out, if it looks like the SPY's coming up, it continues this trend. You could see another major resistance here at the top of a little bit of this channel. And I know that's probably not the most appropriate way to use a regression. We can probably just use a parallel and we'll use it here. We'll go to this extreme. We could use, you know, something like this. Consider this down here a false break, but more or less just to encapsulate everything, you do have this downward channel. So we need to get out of the downward channel first and continue the uptrend, continue its impulses up, meeting up with this 462, breaking out of that. This might be a little bit of a pocket right here of question. You can maybe look at this and see a lot of strength if the market was to continue up between this, what would you call that, mid 440s to the 462 level. But overtaking 462 ultimately could get us back into bulls being in control of the market, and then that all-time high scenario that I've mentioned that we'll talk about here just in a little bit. Now, by no means do I mean it's going to take this angle the entire time. This could be drawn out on a larger time frame. You could come up and break out of this level of resistance, and then, you know, possibly, we can draw this out so I'm not just talking here. Favorites. Now we find some, we do have this little ascending level of local support. I'm not sure how much this will actually hold up, but maybe we get a bounce, a breakthrough of this ascending level of resistance right here. We come out, hit this line, bounce back, find it as support, turn this now into support established, and then bounce our way up into this channel. And this could take a while. You know, we're now in June. Maybe we break out, we come down to test, we wafer, we come down one more time and say, yep, this is it. And then we can come up to 462. So, you know, just drawing that out, which would be a little bit more realistic of a scale. Again, you could have this summer rally come through and test that 462 level. Set yourself a new swing high, or even just set yourself up for setting a new all-time high. So just so we can look at a cleaner chart here, we're going to look at some moving averages, specifically the 1348 EMA, the 50-200 SMA, and the 21 HMA. So overhead resistance currently would be your 13 EMA, your 21 HMA, and your 200 SMA. 200 SMA, since it's been broken on the 4-hour chart back in April 21st to be exact, in the middle of the day, it has not been tested again. It is currently trading above its 50 SMA and its 48 EMA, and the 13 is above the 48 EMA, which is showing a short-term, or at least a short time frame uptrend. But consider your 200 SMA above overhead. What you're really looking for, if this uptrend is to continue, is this 48 EMA and this 50 SMA to stay apart. from each other and not start to cross under each other. I know that's an atypical crossover, but as you can see on this chart, the downtrend as it continues, the stronger that the acceleration was. Of course, the 48 pulling away from that 50 in times of consolidation. And I know this is extreme volatility still, but consolidation nonetheless, you get this tightening and this winding up of these MAs here. Right now, you have this widening showing this uptrend, a strong uptrend. In fact, we don't know the strength until if it tests this 200 SMA. So last time it tested the 200 SMA, it did set this bit of a swing high in reference to the chart that we're looking at right here. But you had a trading period between March 18th and ultimate rejection happening here in April 21. So about a month above that 200 SMA. Not a lot of strength in terms of sustainability, but it did set a swing high off of this double top pattern. So as you're coming up, you're going to be looking for that strength coming through, and you really need to come up before bulls can truly take control to this 462 level. You have to take this high out to show strength in the market. That's whether this happens in a short time period. It could. You've got corporate buybacks right now. There could be some strength that's pumped into the market in June to prop up Q2 and make EPS look better for some of these bigger companies. So you could get a sort of a market rally. The Fed was talking about possibly pausing rate hikes, which Baynard pretty much came out last week and said, no, we're not doing that. But the second that the federal government says, no, we're not going to do something, the possibility actually increases that they are going to do it. So, maybe they're setting us up for a summer rally. Totally possible. Totally possible. We could actually break through that 462 level and set a new all-time high. Remember, and I'm going to conclude this right here. Just because we're down here doesn't mean we can't come up to a new all-time high before we actually crash. Okay? Sorry, I'm not being too technical on this. Let me turn my magnet on. So at one point, we saw that quote-unquote bear market, which we are not in yet. We are not in a bear market yet. It might feel like it to some, but not yet. We did dip down to that negative 20% drop off from all-time highs, and we have bounced back. We overtook the 21, we overtook the 48, and we overtook the 13. I'm sorry, we tested the 48 and got rejected actually. So that would be our next overhead target would be that 48. Daily chart trading below the 200 SMA, well below it. So again, that upward overhead resistance would be your 200 SMA, probably the most important, your 50 SMA second, your 48, and of course these have already pretty much been broken, which should be acted as support if it does decide to turn down. And remember that pattern that we talked about. We have that bearish cipher, we have that ascending wedge, and we have that descending level of resistance, and they're all coming into a confluence right here. So we have extreme resistance on the 1 day at the 48. We have these patterns that we were talking about, overhead descending resistance going back. I promise I'm concluding. To that 2018, that October 2017, we have that rally, volatility starts, this break of the 200, is this our rally? and our volatility that starts our break of our 200. We could look at quantitative tightening starting here. Are we going to get this, or are we just simply going to come up, break this 200 SMA, set ourselves a new all-time high somewhere up here, and then crash ourselves? So those are the two bigger overhead scenarios that I can think of, is that we haven't hit bottom yet on this particular run, and that we could do one more time ABC correction down to set that low before we come back up to all-time highs, or we could be on our way to all-time highs right now before we see one hell of a crash. Even if we hit up, say we get up to the 480s, just as an arbitrary number, we come down 35%. Low 300s. It's a whole lot more scary than the low 400s where we're sitting right now. But this is all stuff to think about. I know these are larger time frames. This doesn't help you much on your intraday time frames, like a 5-minute. I understand that. But we need to look at the overall bigger picture. We need to start with bigger time frames so we can make our decisions on the smaller ones. And please don't misconstrue what I'm saying and cherry pick my words. Just because I'm saying that it's possible and that I see a path for new all-time highs happening in the near future doesn't mean that it's going to happen. I do not know the future. This is not financial advice. These are just my opinions and my observations, looking back in history on the SPY, comparing them to where we are right now, and asking questions. So really, what do you guys think? Are we setting ourselves up for just the middle of a continued downtrend into a bear market, or do you think that we have room and a path to get up to all-time highs and create a topping mechanism? Are we there yet? Are we there yet? These are things to ask yourselves. So please don't cherry pick. I'm looking at it in both directions. I know some people, it's easy to say it goes up or it goes down. Of course it's going to, but you need to be smart. Consider price action in both directions. Consider multiple scenarios so that when price does start to move in a direction, you've already thought about mapping that out. You've already thought about those paths. You always considering the context of why you think or why you thought that it might go in that direction, so that in real time you can make quicker, faster decisions because you have that in the back of your mind. So just please don't cherry pick the all-time high words. Don't just listen to that and run away with it. That's not my point. My point is that this is an exercise that we need to go through. These videos are more exercises for the listeners to go through than really to take away any kind of price target or price direction. And that's not really the point. This is an exercise. But I promised I would conclude, so you guys have a wonderful day. We'll catch you on the next one. Bye.